Welcome back to Breakfast. The banks have, for the past 6 months or so, been competing hard to win new mortgage customers using low fixed rates in a bid to win market share. All the banks have now reported their latest numbers, so who's winning? With me now to answer that is Gareth Vaughan from interest.co.nz. So Gareth, who comes out on top?
Well, ANZ National is the runaway winner from the June quarter. It's the first time since 2008 that one bank has done more than $1 billion worth of mortgage business in one quarter. Now, I mean, they're the biggest bank in the country, and what we're hearing is they've certainly been acting like the biggest bank in the country. They've been very aggressive in the market and generous in terms of offering discounts on advertised rates and cash incentives for lawyers' fees and valuations and that type of thing. And I guess a couple of the things that really struck me is I heard last week that their frontline staff were even pricing deals up on the spot without going back to the bank pricing desks. And also, I mean, anecdotal evidence, some good friends of mine who bank with National Bank were phoned up, unsolicited phone call from National Bank offering to loan them more money. So, they have been really aggressive, and it's paid off in terms of winning market share.
So are they just winning market share, or are they actually writing new business?
It's a combination of the two. I mean, the overall market in the June quarter only grew at 1%, but 1% is still $1.5 billion in the mortgage market, so it's quite a lot. But yeah, certainly there's a lot of customers switching between banks, and they're certainly benefiting from that as well.
And is this to the detriment of, say, some of the smaller guys who, while they might have lower rates in some cases, can't compete on all those added extras? Yeah,
definitely. Look, the smaller banks in terms of mortgage market, a lot of the smaller banks, the TSBs, the likes of SBS, HSBC, they lost a bit of market share. Even Kiwi Bank, their book grew by $200 million in the June quarter, which sounds a lot, but in the history of Kiwi Bank, that's quite a low amount. So definitely, with ANZ being so aggressive, it's only really been Westpac that has got anywhere near them, and that's only sort of just about around $326 million.
Are you expecting that this mortgage war is going to continue, or has the really intense competition passed? I mean, can you still go to your bank and demand better? Yeah,
definitely. Look, I mean, things have quietened down a little bit from that sort of April, May, June period where we saw a lot of fixed rate cuts, and we had all these anecdotal stories of banks paying break fees to other banks, fixed-term customers to win them across. But yeah, look, it's still a great time to be a borrower, especially if you have a reasonable amount of equity in your property already. It's well worth shopping around. Go to 2 or 3 banks, because, I mean, a market that's growing at 1% is, if you go back 4 or 5 years, it was growing at double digits, 10 to 15%. So the banks are really still keen for your business. So it's worth shopping around and looking for rates that are below what they're advertising.
Thank you very much, Gareth. That is Gareth Vaughan from interest.co.nz.